All right, what's up, team? This is Ruben at TGE. And in today's video, I want to show you a success story of one of our TGE Max members. He had a successful month, grew his account by 95%, and I want to break down exactly how he did it, okay? Now, what he did this month was different than what he did from June to January of this year, okay? So, let's just start with the email here. All right, I said, how does a trader grow their P&L in just by 95% in just 1 month? How do they do that, right? That's exactly what one TGE Max member did in February, and I want to break down the key moves that made that happen. Okay, so this was this took a different type of mindset that I had to like tell him to take. Okay, because the mindset that he had to grow from 1,700 to 25K was different than what the mindset he has now. Okay, we're still following the same strategy, the same rules, but certain things have to be tweaked around. And I guess let me give you a quick breakdown or a quick brief uh, background, a little bit of background about like how he got to where he's at. Okay, so back in June of 2024, he joined TGE Max. Okay, and he told me he was tired of bleeding money, day trading, all this stuff. So during that time, he started doing a lot of just concepts, like the first month and a half. No, just like studying, and paper trading. Okay, and then he started a small account. I make all my TG Max members that are looking for coaching to start a small account. Okay, it's really important not just to practice what you did in paper trading, to put it into a small amount of capital. That way, you have some skin in the game, and then it forces you to take every trade seriously. It's not just like you have to be very picky with the trades that you're taking. Okay, so one of the biggest. Okay, yeah, and so during this phase of the small account phase, it's honestly you just take one contract, and you compound over time. And during that, from the month of since June of 2024 all the way to December 2024, he grew that account from 1,700 to like 16K or something like that. And then the month of January, he followed the same principles and he grew that from 16, 17K to 25K. Okay. And so I got on a call with him and just, keeping up to seeing what's going on, what is he stuck with. And he was telling me that he's still like he had one of his biggest hurdles that he's faced was fear of increasing his position size because he didn't want to lose the capital that he had gained. So he's stuck to this like $200-300 position size instead of scaling appropriately. Okay, so it's really important to know how to scale during different environments of the market. Okay, so even after growing his account from 1,700 to 25K, he was stuck trading the same $200 to $300 positions sizes instead of scaling appropriately. Okay, so during this call, I had to tell him like, okay, you need to start upsizing. You have an undersizing problem, which is good, which I wish most traders had, but you're also like hurting yourself because if you want to make some serious cash and you're trading options, you're not maximizing your capital gains. You need to upsize a little bit more, but not to a point where it's reckless. Okay, so the key here is to allocate capital based on VIX levels instead of blindly sizing up. He followed a structured approach. So I gave him a sheet, a guideline to follow. When the VIX is at this level, you can only allocate this much. As the VIX rises in certain levels, you're able to max allocate more capital. Okay, and as VIX starts to come down, you need to start trimming some of that position sizing. You need to get back down to these levels. So you're actively managing your portfolio as the VIX are going up and down depending on the levels, right? So, and that's what trading is all about. It's not just about taking a trade, executing it. It's about also managing how much you can allocate. Okay, that's really really important. This way you can maximize your gains, but yet still protect your capital at the same time. So using max allocation guidelines tied to volatility to the VIX, Trimming and adding positions based on the market conditions. Again, that's just saying like if it went up the VIX like a certain level, then you can up your max allocation. If it starts coming to back down to these other levels, lower levels, then you need to start trimming. Maintaining a risk balance, not overly conservative, but not reckless. Okay, really, really important. And then he also used Gextron. So this is a tool that is created for TGE Max members and TGE Pro members. So this leverages option flow data and the option premiums tied to it. Okay, this is really important because it allows us to make smart strike selection without us having to really think about what's the best optimal strikes. It gives us key liquidity levels, right? Like based on real-time option flow. So like we know what key levels are going to be important based on the option premiums. Now, again, it's all about making our lives easier. We know how the concepts work, but putting it into practice every day is too much manual work. So we use Gextron to help us make our lives easier and just like look at something simple and just be able to mark it and see perfect. Like this looks good. Gamma intensity zones, right? So it's just about spotting optimal entries and exit points. That's it. And Gextron makes that really simple. Instead of guessing, we're gonna let data drive his trades. He knew exactly where buyers and sellers should step in, allowing him to make high probability moves with confidence, right? By having Gextron telling us what to do based on the option premium, honestly, it's just math game at this point. Like it's just numbers and we're not guessing. So we're just going to let the data tell us what we need to do and that's it. It keeps us very systematic, very mechanical, okay? Tighter risk and bigger wins. This is really important. Okay, if you look at his trade history, which is the image here above, okay, you're gonna see I think his thing went up to 95% and then it did down to 50, so and so on and so on. Let's go back here. I said, if you look at his trade history, you'll notice something. His losses are tiny, and that's because we built a stop loss strategy based on the option premium rather than just the stock price movement. Why? Because in option trading, a falling stock doesn't always mean the option price will drop at the same rate. This is really important. We trade a lot of options inside TGE Max. And so a lot of traders want to they have like a P&L stop loss on their option premium, or sometimes they look at the the equity itself and they're like, if it falls below this level, then I need to get out. But it doesn't fall at the same rate because we have theta decay on option premiums. So we're looking at the option premiums giving us support lines, key levels as well too. So we're saying theta decay can eat away at the premium, making the standard stop loss unreliable. Okay, so we use the option premium chart as our stop loss. By adjusting stops based on the option price itself, he kept risk low and let winners run, right? Okay, mastering a handful of stocks. During our call before February, we trade a lot of stocks. Okay, we have a list. Especially the more you trade, the more you trade, like the more years you have, you're gonna have a lots of stocks. And the thing is to try and boil down to like I say 20 to 30 stocks that you know really well. And that can take some time. Okay. It doesn't come right away. Like it takes time. I've been trading for like like 6 years, 5 years now. You know, over that time, I have come across many, many stocks, many tickers, and I only trade a handful of them, maybe like 15 to 20. Okay, I haven't even gotten to 30 yet, but over time, I will be getting into those levels. It just takes time, but you have to trade them over and over and over again, so you know how to like get familiar with them. I don't trade Tesla and I don't trade Nvidia. I never had luck with those, so those are two tickers I don't trade. Okay. Instead of chasing every hot ticker, which is what a lot of traders do, he focused on a few high activity stocks. Tesla being a prime example. He got really good at Tesla. I am not good at Tesla. He's good at Tesla. He'll post screenshots every like twice a week saying like he just banked on Tesla. He just knows it really well. Why? High implied volatility. So we're looking for tickers that have high expected moves. Okay. Tesla is one of those because it has a high IV. Nvidia is one of those. Apple, somewhat, but it's a good move. QQQ, IWM, better than SPY. Those are better than SPY. I like Lily. Lily has very high expected moves. Like when we look at Gextron, it tells us the expected move for the week. It's always like 15, 20 points. That's a lot of dollars, making the delta increase the option premium very high when it's in my favor. Consistent option volume. So we're looking for tickers that have liquidity as well. You want to pick tickers that have liquidity, so it makes it easy to buy and sell, right? When you have very low liquid option trades, selling becomes even more of a pain rather than buying. And then you just get really familiar, right? Better reads on price action. By becoming an expert in a few names, he trade with conviction. You trade with conviction instead of reacting emotionally to market noise. In January, he took his account from 1700 to 25K. In February, he refined his approach based on what we talked about, and he pulled an additional 23K in profit. Okay. And that's how real repeatable growth happens in trading. So the key takeaways really is like allocate capital strategically based on volatility. That's one thing. That way you're not reckless and you're not too conservative. Use data-driven tools like Gextron for precision. So really do a lot of we focus a lot on option premiums. It's very very important for us because that to us is more forward look. That is forward looking rather than backward looking, like all the lagging indicators. Stop guessing and start positioning intelligently. Right, keep risk tight by adjusting by stops based on the option premium price, and become an expert in a handful of stocks. When you remove fear, focus on data, and execute with discipline, the results take care of themselves. Okay, and that's pretty much it. That's how he grew 95% for the month of February. Very, very impressive results. And it's just one of those things just to go show you like by just adjusting a couple things, you can really like maximize your gains. There's no other secret, all right? So this is it. Like if you're interested in getting similar results like this, I'll put a link in the description box if you want to have coaching like this. If you want access to the tools that he's using like Gextron, I'll put a link in there so you can book a call, like a demo call. And that's it. Like if you're ready to make money, like I'm here to help you. All right. Peace out.